All right, crypto degens and battle-hardened hodlers, welcome back to the Fat Bear Pod. I'm your host, PB. Let's kick off week 14 with Bitcoin price action. Bitcoin's hovering around 82K right now, down from those glorious triple-digit highs we were popping champagne over not too long ago. We're still in a downtrend, folks, and it feels like the chart's just mocking us at this point. I mean, I've seen more upward momentum in a sloth race. The total market cap sitting at a measly 2.66 trillion, but a lot of it is just illiquid meme coins and old dinos. Meanwhile, the 24-hour volume's clocking in at 49 billion, which is basically the bots fighting over scraps. Bitcoin dominance? Inching higher to 61.3%. And then there's a fear and greed index, still sitting at 24 in the fear territory. For the alt's performance, the top gainers are EOS, Fun Token, Renzo, and Layer Zero. The biggest losers are Mubarak, Neo, Orbiter, and Xi'an. Wondering what made everything goes down? Macro. And it's all tied up in this Trump-fueled circus. Global markets are a flat line on the surface. World stocks basically yawning at the year's start, but underneath, it's pure chaos. Gold's having its best quarter since 1986, up 17%. Because when Trump starts swinging trade war tariffs like a cowboy, everyone runs to the shiny safe haven. Meanwhile, the dollar's down 4%, flirting with its worst start since the 2008 crash. The Magnificent Seven tech giants? More like the miserable seven, down $2 trillion, lapped by Chinese rivals and Europe's defense firms. BYD's laughing all the way to the bank, while Tesla stock takes a post-inauguration nosedive. Macro's all doom and gloom, so let's hop over to crypto news next. President Donald Trump granted full pardons to the three masterminds behind BitMEX, that Wild West crypto exchange back in the day. These guys were nailed back in 2020 by the U.S. Department of Justice for violating the Bank Secrecy Act. The trio pleaded guilty in 2022, coughed up $10 million each in fines, and got slapped with probation. But this month, Trump swoops in, signs the pardons, and suddenly these guys are free as birds, no more legal baggage, no more felon label. Why'd Trump do it? Who knows? Maybe he's flexing his pro-crypto cred after courting donors last year, or maybe there's some deal under the table. BitMEX parent company, HDR Global Trading, even got a pardon, which is wild. Corporations getting clemency now? While Trump's giving out pardons like candies, Mara is buying billions of Bitcoin behind the scenes. Mara, the Bitcoin mining behemoth, is planning to offload up to $2 billion in stocks to stack their Bitcoin stash even higher. This comes hot on the heels of their already aggressive strategy. As of early March, they were sitting on 46.3K BTC, worth about $3.8 billion, making them the second biggest corporate Bitcoin holder behind strategy. Now, they're doubling down, betting the farm on BTC while the market's still a jittery mess. Bold. Mara's been on a buying spree lately. Back in August 24, they scooped up $249 million worth of Bitcoin at 59.5K a pop. They've been mining like maniacs too, cranking out 750 BTC in January alone. And they don't sell unless it's to fund more rigs or pay the electric bill. Their hash rate's at 53.2 exahash per second, making them a top dog in the mining game. So why sell stock now? Because apparently, Bitcoin's a golden goose, and they're all in on this corporate treasury gamble. Across the pond, the EU is on the hunt for crypto insurers. The EU insurance watchdog wants full coverage for insuring crypto, and it's got me rolling my eyes harder than a miner watching his power bill spike. They're proposing that insurers holding crypto assets need to back them 100% with capital. Why? Because crypto's inherent risks and high volatility make it a ticking time bomb, they say. This isn't like stocks, where you only need 39 to 49% in reserve, or real estate at a cushy 25%. The numbers? European insurers are barely dipping their toes in 655 million euros in crypto exposure, a measly 0.0068% of their 9.6 trillion euros in assets under management. Most of it's tied up in ETFs or investment products for policyholders, not some wild YOLO bet by the insurers themselves. But if the European Commission signs off, insurers might just say, screw it, crypto's not worth the hassle, and stick to boring old bonds. Next, let's get on with our DeFi developments. Hayden Davis, the hustling expert who's already infamous for the Libra disaster and his cozy ties to political bigwigs like Javier Milei and the Trumps, is still at it with Melania. You'd think he'd lay low after the CoffeeZilla expose and the Argentina fraud probes. But nah, this guy's got the audacity of a bot sniper on a fresh Solana launch. Hayden's been dumping Melania like it's hot garbage, yanking over $2 million from liquidity pools in just the last 2 weeks. Hayden, playing the one-sided liquidity game, swapping tokens through DEX pools on Solana, draining Sol, and crashing the price while he cashes out. On-chain data shows his Kelsier Ventures wallet still holding $9.41 million in tokens, including Melania and Libra, and he's even using Camino Finance to leverage this junk as collateral. The man's a walking exit strategy. Centralized exchanges like Kraken and MEXC are still letting him dump, and Circle hasn't batted an eye at his USDC profits. Remember the Bybit hack? There's more insight on why Lazarus took a siesta in late 24. Lazarus Group, sudden go quiet in late 2024. Illicit activity tied to North Korean hackers nosedived after July 24, despite a banner first half where they snatched $1.34 billion across 47 incidents. But then, radio silence. No big hacks, no splashy wallet drains. Fast forward to February 25. Bybit, the Dubai-based exchange with a $20 billion in asset under management, gets hit with the biggest crypto heist in history. $1.46 billion in Ethereum swiped from a multi-sig cold wallet. How? A slick, deceptive transaction tricked signers into approving a malicious smart contract tweak. Classic Lazarus playbook. The FBI pinned it on their Trader crew, and blockchain sleuths like ZachXBT and TRM Labs tied it to past hits like BitMEX and Ronin. Turns out, that late 24 pause wasn't them chilling with kimchi and K-dramas. It was a strategic regroup. Analysts say this pause let them test phishing lures, refine malware, and map Bybit's defenses. But enough about the Bybit breach. Turning our attention to a different kind of frenzy, meme coins. Raydium is rolling out LaunchLab, a meme coin launchpad that's basically pump fun with Raydium twist. Word on the street is that this thing's been in the works for months because Pump Fund started flexing its own AMM plans. Yep, Pump Fund decided to cut Raydium out of the deal with PumpSwap, launched March 20th. Raydium wasn't about to sit there and watch 41% of its swap fee revenue vanish, so LaunchLab's hitting the stage within a week. What's LaunchLab got? It's Pump Fund's playbook, plus support for multiple, quote, tokens beyond Sol. And third-party UIs can slap their own fees on top, because who doesn't love a middleman skimming the pot? Raydium claims it's not a pumped-out-fun killer, just an alternative. But let's be real, this feels like deja vu where another protocol is chasing old trends instead of building something new. Finally, we're diving into Theo Network and Mitosis airdrop mashup. Theo Network is a cross-chain DeFi protocol aiming to fix liquidity fragmentation, stitching together assets across blockchains like Ethereum, Arbitrum, and Base with delta-neutral twist. Think stablecoin vaults that juggle lending and perps to snag funding rates without the wild price swings. Theo's playing it cool with $8 million raised from Amber Group and Foresight Ventures. Their Theo earn vaults a star, deposit USDC or ETH, let it simmer and watch the yields roll in. Here's where it gets interesting. Theo and Mitosis are teaming up, deposit into Theo's vaults via Mitosis' platform, earning both Theo points and Mito points, with yield stacked on top. Withdraw anytime, but pull out early and kiss your accrued rewards goodbye. Classic DeFi carrot and stick. Posts on X are split. Some call it a multi-airdrop gold mine. Others smell a points grind milking. The timeline? Mitosis' TGE is looming, and Theo's token is teased for Q2 2025. That's all for this Monday. Keep your stables close and your keys even closer. I'll see you guys tomorrow.